With Pete McGuire from FX.com. He is with us in our Sydney CBD studio. Peter, warm welcome into the program. XM Group, welcome into the show, CEO. Peter, your just thoughts on that one before we get down to details on commods. Just that arbitrage between the two majors, it just caught my eye, and there's quite a big discount on the Rio v the BHP performance there. Any thoughts?
Well, good afternoon, Carsten. Yeah, certainly. I mean, arbitrage is very much a part of, traders, I suppose, their agenda. And when these opportunities do present themselves, if you get the opportunity, they certainly take advantage of it. Mutual offset, futures markets, years gone by, certainly that allowed plenty of those conditions. As the panel just said, you've got franking credits and you've got some markets that you can trade on and other ones that you can't. So, or mutual offset, I should say. So that was probably one of the reasons behind it.
All righty, staying with the theme. Let's look at Back in the Black, a headline that's quite compelling. A 5-year route at an end. I mean, this is not really just an energy story here. You're talking about the ag space with soybeans. You're talking about zinc,
copper, lead, gold.
But these are different stories, though. If you pull that thesis apart, right? You're taking it as a collective. How is that significant?
Well, when you take on board, Carsten, you look at the Bloomberg Commodity Index since the start of the year, it's up about 21%. It's a very, very solid gain, as we all know, but still 50% off its high that we experienced in 2011. So the market's rebounded. Crude oil has certainly carried the tide. The soybean market up 55 and 32% respectively against soybean meal and soybeans. Sugar's up 20-odd%. So a lot of these markets have had very, very strong rallies, and what's happened with, of course, the energy complex. But we take on board the big picture, looking at those 2011 numbers, and that nearly plays into PwC's report as far as the big mining companies, what happened in 2011. So, the market certainly had a rebound, but it's well off its highs of what we experienced in 2000 and late 10, early 11.
To paraphrase the PwC report panel, shareholders not properly rewarded during the mining boom, despite firms making massive profits. I'm wondering what the rationale for that report being put out there now might be. Peter, your thoughts on that?
Well, a couple of things, Carsten. I mean, have a look at you look at the big players, the Anglo-Americans, the Vales, the Freeports. All of those companies have had large impairments. They're talking about, if you think of what the mining capitalisation of these companies, they're down, I think, around about 65% from their highs that they experienced in 11. We're nearly back at numbers of market capitalisation for the top 40 miners, I think, back to about 2004. So anyone would say yes, they spent far too much on mergers and acquisitions. They chased the big storyline and large dividends, of course. So I'm open to the panel, whatever their thoughts are, but it's a very compelling story.
I got a really strong view on this, and I wrote a blog piece on it about a year ago.
Wonderful. Yeah.
The shareholders only have themselves to blame. Rio had a fantastic CEO 2003 through 2006, and he sat there and said, this is a cyclical business. We are not going to deploy a whole heap of capital here through the boom. He got fired because the shareholders are putting pressure on the company to grow. They went out and bought Alcan. 2 months after they'd fired him, new CEO came in, went out and bought Alcan. Disastrous investment. All of this expansion, I really think it's been driven by shareholders rather than the management teams of these companies. They've put in place a bunch of people that came in to do an expansion job, and that was shareholders that wanted that. So they can't sit here now and then criticise the companies for saying you did what we told you to do. And I feel a bit the same about ANZ with Mike Smith. I mean, the guy went off and did his Asian expansion plan because that's what the board got him in to do. So whose fault is that? Is that his fault for being the person who was hired to do a job, or is it the fault of the people who got him in?
Very true.
Say rhetorical there. I'll take that as a comment, not a question. Quite the phrase. Your thoughts, anyway. You want to
How do we tiptoe through that minefield? I think you are right around the idea, rather than making a comment about ANZ. I think you're right around that idea that shareholders are accountable. Not all shareholders are the same, so I suppose that the nuance within that is, and I've said this, the drive for dividends is a slow-moving train wreck. You know, these people need to retain they need to retain money, and you keep giving them dividends because they think they need the dividends, or they do need the dividends, and it's driven by the fact the cash rates are here. So no one is actually prepared to take the bad medicine, and I think then because not all shareholders are even, you are affected and going, where do I put my money? So,
but how would it have gone down? You're sitting there in 2011, Twiggy's building Fortescue up, and you're sitting there as Rio and you're saying, we're not spending a cent. Honestly, how would that have gone down in the market?
Well, look,
their share prices are all through the roof. Exactly,
yeah.
That's exactly what has happened. So all of the whinging now in hindsight is very easy.
But just to go back and to sort of do it differently and to hypothesise that you could have just sat there and ridden it out, you're saying in hindsight that would have been preferable?
100%, absolutely. And now you would be out there with a really strong balance sheet buying some of these assets, but you need a controlling shareholder to do that. I don't think you can do that in an open market.
look at Warren Buffett. You know, because he's engaged with the investors and he's won them to the narrative on his business, they follow his lead. So I don't understand it, so I'm not going to buy it. Okay, if you don't understand it, we're not going to buy it. So I guess it's around that idea. What's your engagement and who is your engagement with? Is it with the top investors or is it with the broader market? And we've said that when BHP were in trouble, how did they get out to the market? And everyone said, well, you know, their PR people will come out. And, you know, I think that's missing the point. The point is you have to change the argument. You have to say, I don't agree. You don't need these dividends. You need to give me the money because I'll make it grow. That's right.
I'm a long-term patient shareholder. Someone comes to me and says, I'll give you a 40% premium for shares, and then they put the pressure on. I just think when you've got that open register, Buffett owns 30% of Berkshire, there's nothing anyone can do. But anyway, back to that commodities space, Pete. Are we seeing, I mean, we've seen a massive rally pretty much across all commodities out of those January lows. Are we seeing divergence? Are we seeing, or do you think it's likely to see different commodities perform differently from here on?
Well, when you look at some of these softs, I mean, they've had, you know, shoot the stars out, 25 to, you know, 50% upside. Certainly when you look at the energy market, up 75 to 80% from its lows in February. Gold, if it keeps on track, we've had 3 successive years of annual decline. This could be a first year that we're going to see some green lights there. So you look across the whole sector, copper's up. I think it's going to carry all tides, but the tide will carry all boats, I should say. But at the present, you've just got to be conscious. If you do get any disruptions, you do get some outliers that come in as far as ag sector. There is always the uncertainty with commodity markets will never go away, and I think 16 will be a very, very volatile year. I'm very conscious where the US dollar trades, and that could underpin pricing. You know, the market comes off their US dollar. It's going to be very interesting what happens to crude.
Well, it's interesting. It did unwind. It sort of made that unwind move overnight, right? And yet still crude stays below 50 a barrel.
Yeah,
so,
I think so, but I'd say that there's been a lot of shorts there. The market is still conscious as far as the hedge funds playing in it. And I think that there's that psychological barrier, Carson, $50. Brent's through it. Well, it went through it. It's still trading around that sort of range. But for WTI and Brent to be, you know, 53, 54, I think there's got... I'm not saying it won't happen, but I think for it to happen, it'll have to be, you know, mid-July.
Mark,
Pete,
you know what we're calling out.
Pete, I mean, somehow I've got this mantra, mate.
Come on, exactly.
Somehow I've got this mantra. I don't know how that happened. It's just Bloomberg. We're up by 4, Pete. You'll be happy to know in the week leading up, you now have 408 rigs in the US.
Wow.
Yeah. And interesting, it's all on land. They're actually getting rid of the ones on sea.
Well, you know what will happen, Mark? As the price goes up, you'll see more and more rigs come back to market, more and more production, and that's what's going to be the handbrake to the upside.
Yeah, so the Gulf of Mexico stuff, they're taking rigs out. It's literally, it's all the stuff on land. So it's interesting.
It's all the fracking.
Yeah, it's all the fracking. That's coming back together.
Yep, and that's what brings them back on at $50. We all know that $40 they can't compete, $30 they go home, they get a new job. At $50 they're back on board.
Look, we were talking earlier about an unknown proposition to many, Yowie. There's the sugar connection, and I know that the guest that's pushing this was saying, look, it's a thin crust, there's not much chalky in it, ergo not much sugar cane being felt as part of the production process. But this fundamentally, coming into that ag space on sugar, what are you calling out, Pete? What are you hearing?
You're going to be
seeing?
plus 20 cents, Carson. It's up about 20% in the short term. And the reasoning is, first off, you've had a bumper crop coming out of Brazil. Next part, of course, which was solid for the market, but the real problem was that you had those drought conditions in India and Thailand, which has greatly affected crop size. And moving forward, I think there's going to be a bit more upside. They're turning ethanol production on as far as Brazil's concerned. So that's also going to play into the market, and I think that you're going to see further upside.
On that note, on the upside, we'll leave it there. Pete
Thank you.
McGuire from XM.com.